People should care about the truth because the truth is the truth about how things are. And it's important for us to recognize how things are, not to pretend that it's something else. If you have the truth, you know what reality is like. If you don't, you're ignorant of reality.
We have pattern recognition technology on any chart to help you anticipate potential price movement.
Wow.
It's all about understanding patterns, like Jerry getting dumped every third Tuesday.
This happens every third Tuesday.
TD Ameritrade.
We're talking to a guest right now, author Jim Rickards, who has a new book, The New Case for Gold, and he believes gold prices will go to $10,000. Not sure what time frame he's talking about, Jim. What do you think? What is driving gold right now? What will drive it to 10,000, and when is that going to happen?
Well, three different questions, Sharon. What's driving gold right now is what you were just talking about, which is the dollar. Look, when I think about gold in terms by weight, so many ounces, so many kilos. If you have 50 million, you can get a ton. But a lot of people think of it in dollars, the dollar price of gold. You're sort of privileging the dollar as your numeraire. But if you think of it in dollars, the price of gold, the dollar price of gold is just the inverse of the dollar. So weak dollar, higher dollar price for gold. Strong dollar, lower dollar price for gold. So all you have to say, if you want to know what gold's going to do in dollars, ask yourself what's going to happen to the dollar. It's going to go a lot lower, and so the dollar price of gold is going to go a lot higher. That's the trend for the next, say, 6 months to a year. That's what came out of this Shanghai meeting on February 26th. The Fed's been tightening for 3 years. There's a global dollar shortage. BIS came out with a very good study on this yesterday. I recommend it to the viewers. So the Fed's got to ease up. There's no way they're going to raise, at least for the rest of the year. Now, longer term.
But $10,000 is that's a strong call. So when is that going to happen?
Well, that will come when there's in the next global financial panic, which we should expect soon. Remember, we had one in 1998. We were hours away from every market in the world closing. That was long-term capital management. I did that bailout. We had one in 2008. We were days away from the sequential failure of every bank in America. Again, the Fed bailed it out. Come forward 10 years, let's say 2018. The next time there's a crisis, the central banks are not going to be able to bail it out because they haven't normalized their balance sheets. So the bailout money is going to come from the IMF. They have the only clean balance sheet left. They'll use SDRs. That'll be because of loss of confidence in the dollar. $10,000 is not a made-up number. That's the implied non-deflationary price. Just look at global M1 with 40% gold backing. Look at the official gold in the world, about 35,000 tons. It's eighth grade math. It comes out to $10,000 an ounce to use gold to create confidence in the dollar.
Real quickly, and I want to bring Scott in, but basically what you're saying is the world is going to have to implode, basically, to get to that $10,000. That's a very dire situation that we're talking about for all of the financial markets, not just gold, if we get to the 10,000 mark in gold.
Well, it almost imploded twice in the last 18 years. I mean, 1998, again, hours away from complete collapse. 2008, maybe a few days away from the failure of every bank. So we have imploded twice in the last 16 years. So get ready for the third one. The difference, Sharon, is that 98, Wall Street bailed out a hedge fund. In 2008, central banks bailed out Wall Street. In 2018, who's going to bail out the central banks? It's going to be the IMF.
Scott?
Jim, I have a question. The investing landscape is littered with people who have said that gold is going to go to $5,000 or $10,000 an ounce. In fact, 3 years ago, we had Peter Schiff on our air when gold was at $1,700. He said that gold would be at $5,000 an ounce in 2 years. That was a year ago, and we're actually quite a bit lower from there. We have seen lots of people come on and say gold is going to outrageous prices. What is the mechanism that is going to lead people to flock to gold, even if what you say happens to the Federal Reserve? Why would people buy gold? If you can't eat it, you can't drink it. It seems to me that if you're worried about what you're describing, you want canned food, bottled water, and ammunition.
Yeah, well, no, I think life goes on. I mean, we've been through worse crises. Look at the Great Depression. In March 1933, President Roosevelt closed every bank in America. He shut every bank and confiscated all the gold. So we've seen these things before. 1914, the New York Stock Exchange was closed for 5 months. 5 months, not 5 days. So these things happen.
It was closed because of a world war, not because of a financial problem.
Oh, you think World War is obsolete? You think that's not going to happen? Look at the South China Sea. Look at the Middle East. Look at Libya. Look at Iran.
I'm saying it doesn't do anything for gold. It doesn't do anything for or to gold. You can't say that the stock market was closed for 5 months because of a financial panic when it was really because of some crazy guy shooting an archduke.
Yeah, but it caused a financial panic. That's the point. Everyone in Europe held on to their gold.
No, it wasn't a financial panic.
It was a financial panic. Yes, it was. Look at your history. There's books called When Washington Saved Wall Street. What happened was the Europeans sold stocks to get gold. The gold was being shipped by J.P. Morgan from New York. Bank of England actually opened a branch office in Ottawa, Canada, so they could send it by train because of submarine warfare. There was a total financial panic. I mean, look at your history. That's what happened. Now, it was caused by World War I. I'm not saying there's no connection. Of course there was a connection. But it wasn't
That's the reason they closed the stock market. You can't say they closed the stock market because of financial panic.
No, they did. They did because everyone was selling U.S. stocks to get money to buy gold to ship it over to Europe. And so they said, well, we can't have the market collapse. So they closed the market. Everybody went out on the street. You had a curb market. Again, this is well documented. I'm not making up the history. But by the way, we don't have to posit that. I mean, we can. There are many other things that could go on. It could be a natural disaster. The point is the system is unstable.
Why would people buy gold if those things happen?
They always have. It's money. See, don't think of gold as a commodity. I don't think of gold as a commodity. I don't think of gold as an investment. It's money. But it'll be a kind of money that people have confidence in. You say you can't eat gold. Well, take a dollar bill out of your wallet, Scott. You're going to eat it? You're not going to eat the dollar. It's a medium of exchange. It's a store of value.
So Jim, to be clear right now, you're just buying and holding gold because you think it's going to go to this level. You're not really trading it.
No, I buy and hold gold to preserve wealth. I worked hard for my money, and I want to preserve it. I don't want to see it wiped out. I don't want to see a 30% decline in the stock market. I don't want to see inflation in the dollar. Gold will preserve my wealth. That's why I have it.
I wanted to bring in Anthony Grisanti too to talk about how you trade it right now, though, Anthony. What do you think about what has been said, and how are you trading gold right now?
Well, Sharon, every time the Fed misses a deadline, we have a saying on the floor: add $30, $40 to the price of gold. And last week, when it looked like the Fed might act, gold actually sold off quite a bit. You saw the hedge funds kind of liquidate a lot of their positions. But now that it doesn't look like the Fed's going to act after that poor jobs number, they came right back into this market and started getting long again. So I'm going to trade this from the long side because I do agree with the point that I don't think the Fed's going to raise this year, and I think they're going to have a very difficult time to raise next year also. I think the economy is weak. It's starting to show that. And I'm a buyer. So at 1260, this trade looked a lot better this morning. At 1260, I'm looking to buy gold right now. I put my stop in all the way below 1242. There's good support at 1250. I'm not looking for a move to 10,000, but I'm looking for a move close to 1300, 1295 to be exact.
All righty. Well, Jim Rickards, thank you very much for your insights about the gold market as well. And we thank you for joining us on Futures Now. Scott, let me get to you real quick. You heard what Anthony had to say about how he's trading gold at the moment. What's your trade on gold?
I don't think much of Anthony's trade. Why? Because while we did really well with the trade buying it at 1210, I think all of the juice that we've gotten from the Fed for gold is out. 1275 is a critical level. We got above 1300 briefly last month. Well, that ended up being a key reversal. I think that this level is the top for gold.
All righty. So
Scott, I don't know about that. You got a dollar today that's rallying, and you got gold that's up over $10 an ounce. So there's definitely some buyers out there that don't agree with that position whatsoever. And, every time everybody's putting the death knell on gold, it has bounced this year. So it's probably one of the best performing commodities in the market. And as I said, this to me, it's based on the uncertainty the Fed's creating. So
That's
I'm
my
still going
point.
to be a buyer as long as the uncertainty's out there.
That's my point. I think the rally's done. We've had the rally. I think it's done.
All right, so Anthony, the risk reward here, quickly on gold.
Sharon, I'm risking 1,800 on this trade to make 3,500.
Scott Nations, we talked about the dollar on the air. Let's discuss it again. We're seeing dollar strength. Some people thought that it was already priced in. Do you think the dollar moves significantly higher from here on the fear that more rate hikes are ahead?
I think it is going to get a little momentum. And why is that? It's because, as Jim pointed out on air, that the Fed has managed to hike and the world hasn't fallen apart. And so that indicates that the Fed hiking and the Fed hiking some more in the future is not going to bring the world to an end. We also pay attention to the fact that the Eurozone is doing exactly the opposite thing. They're still trying to lower interest rates, and that's great for the dollar.
Okay, what you said was that we had a rate hike and the market didn't fall apart. Bringing on Peter Schiff in just a moment. He has come on this show multiple times and told us all that the Fed actually would never be able to raise rates. Take a listen.
Everybody is still fooled by the Fed. They still believe that the Fed is serious about raising interest rates as if they can actually do it. Even if the Fed wanted to, they can't, not unless they're willing to put the economy through a protracted recession and a worse financial crisis than 2008, which is exactly what they should do. They should have done it in 2008, but they didn't, so they're not going to do it now. I do think gold can have a nice rally by the end of the year because I don't expect the Fed to raise rates in December.
Peter Schiff is joining us on satellite. Peter, welcome. Your reaction. The Fed did raise rates, and the market isn't collapsing.
Well, first of all, it just happened yesterday, so you got to give it some time. It's not going to happen in one day. But, you know, when the year began, everybody thought the Fed was going to raise rates earlier in the year. People thought March. People thought June. I kept saying the Fed wasn't going to raise. The Fed wasn't going to raise. And then by the end of the year, right, with 2 weeks left in the year, I think the Fed thought they had backed themselves into a corner. Everybody believed that if the Fed didn't raise rates, it would show that they had no confidence in the economy. So I think symbolically, just to kind of show they have confidence in an economy that they should have no confidence in, they raised rates to 25 basis points. And really, I don't even think it's a 25 basis point raise. Because if you look at where rates were, the new range is between 25 and 50. If the Fed targets the low end of that range, it might really be 10 or 15 basis points that they're trying to pull off. But I think the rest is back to the bluff. They're not going to raise rates 4 times in 2016, not even close. I mean, we're already almost in a brand new recession, and I don't even think the last recovery was even genuine. But if you look at all the economic data points that have come out, and there was horrible data that was released yesterday that everybody ignored in manufacturing, more horrible data today on our current account deficit, on the Philly Fed. We are rapidly going into recession again. And normally, when the Fed first starts raising interest rates, it's when a recovery is just getting going. So you have a lot of momentum in the economy. You have a lot of pent-up demand. This recovery is already over. And now the Fed is trying to raise rates. they're going to quickly have to reverse course next year. They're going to take rates into negative territory, not just real rates, but nominal rates, and they're going to do QE4, and it's going to be bigger than ever.
Wow. Peter, you're talking a lot of big talk here. The first piece of it, the word recession. When do you think that happens, triggered by this rate hike?
Well, remember, the Great Recession started in December of 2007. Mid-2008, the Federal Reserve still didn't have a recession in its forecast, even though we were knee-deep in it. I remember going on television shows in early to mid-2008 talking about how weak the economy, and nobody believed me. So I think the economy could already be there. Certainly if the government measured it honestly, it is. But I think we can have a very weak GDP number in the fourth quarter. In the first quarter, we can easily have a negative number. The Christmas sales are going to be horrible. It's already off probably to the worst Christmas season since 2008, 2009. Businesses are loaded up on inventories, and they're also loaded up on employees that they don't need. So I think a lot of layoffs are coming early in the new year. I've been saying this for some time, and I think I'm going to be vindicated. And so Janet Yellen is theoretically raising interest rates just as unemployment has hit its lows, and now it's going to be moving up.
Okay, so I just want to follow along with your school of thought here. If that's the case that you just described, is that what triggers the Fed to come back in, reverse course as you're suggesting, and take us into negative territory?
Yeah, I think when the layoffs start and we start to see some negative non-farm payroll prints, meanwhile, manufacturing is already in a recession, and that's just going to get worse. And obviously, this rate hike and the belief that the Fed has got more coming is just going to accelerate this process. You don't find out about all the mistakes that were made until the Fed tries to remove the stimulus. We have had 7 years of 0% interest rates, and the damage that the Fed has done to this economy is immense. It's much greater than what was done under Alan Greenspan, and that gave us the 2008 financial crisis. So you can only imagine what lies ahead as a result of what the Federal Reserve has done to us this time.
Peter, what if you're wrong? What if the Fed's confidence in the economy has a grain of truth to it? What if this recession doesn't happen and we do see maybe not 4 rate hikes next year, but a gradual plan as the Fed has suggested?
Well, I suppose that I could be wrong about it, but I don't think so. I mean, look at Ben Bernanke, rather.
But you also said she would never raise,
listen to an
and
interview
she did.
with him in which he was asked about all the rosy statements that he made in 2005 and 2006. And then he tried to cover his tracks by admitting that he was speaking as a member of the administration. And I think Janet Yellen is doing the same thing. She is a loyal member of the Obama administration, and she wants to talk up this economy. She wants to pretend that it's a strong economy, that she has confidence. If she had confidence, she would have raised interest rates years ago. In fact, all the economic data was much stronger years ago than it is today. So if that was the case, why didn't they raise interest rates a long time ago? Why wait until the data is at its weakest in 6 years and then, claiming to be data dependent, raise interest rates anyway? This is all to try to pretend the economy is much stronger than it is. But all of this is going to come back to haunt the Fed in 2016 when they have to deal with the consequences of this. And I think they're going to look a lot more foolish having raised rates and then having to reduce them than had they left them at zero the whole time. But of course, all of this is wrong monetary policy. Interest rates need to go up. They need to go a lot higher. And it shouldn't be the Fed that decides that. It should be the market. But once this bubble economy has to deal with a market rate of interest, the whole thing is going to implode because we've never had a recovery. We've just had a bubble.
Peter, you certainly are entitled to your opinion, and you've laid out the scenario that you think is going to occur. But why can't you just admit that, as we showed in the clip, you said the Fed could never raise rates, and the Fed did?
Yeah.
You're wrong.
Yeah, so other people thought they would raise rates a lot more than just a quarter point for all of 2018. Look, I knew it was possible that they could do it, and this is only, again, 25 basis points. And the only reason they did it was because they were afraid not to, because people were going to say that this must mean that they're nervous about the economy. So to show that they weren't nervous, they raised interest rates even though they didn't want to do it, and even though they are nervous. But I don't think this nullifies what I've been saying. And ultimately, if they have to go back to zero, if they have to go negative, if they have to launch QE4, then that validates everything I was saying. And this symbolic rate hike isn't going to mean anything.
Scott Nations.
Peter, for a long time, you've been quite a bull in gold. It's down 25 bucks today. It's at its lowest level in years. What do you say to the people who bought it at $1,700 when you said buy it there? What do you say to the people who again bought it at $1,225 when you told them to buy it there? What do you tell them when it's now at $1,050?
Yeah, look, the same thing I've been telling people all along. Remember, I started telling people to buy gold when it was under $300 an ounce. So depending on when you first started listening to me, that depends on on where your situation is. But I don't tell people to put all their money in gold. I tell people to put some of their money in gold, 5 to 10%. And as you get more money, and if the price of gold comes down, now you can add to it at a better price. I mean, I think my advice to have some of your money in gold is much better than almost everybody else's advice in this industry, which is to have none of your money in gold. And, you could look at history over the last 15 years. The stock market has been cut in half twice. And there are plenty of stocks that people have bought that were highly touted on your network that went down a lot more than the price of gold has gone down from its peak. So it's not
Peter,
that an asset can't go down, especially when so many people are so wrong about what they're perceiving. Remember, in the short run, right, markets are a voting machine. In the long run, it's a weighing machine.
Peter, let's
and
talk
right
about,
now, the votes and everything is
so
great,
wrong.
and that the Fed is doing everything right, outnumber the votes of the people who know that they've done everything wrong. But in the long run, the
Peter,
price
let's
of
talk
gold is
about
going to
being so
reflect all
wrong.
these mistakes.
Peter, you're doing a great job of filibustering, but let's talk about being so wrong, because when you told people to buy it at $1,700, you said it was on its way to $5,000. That sounds like so wrong to me.
So,
and the problem I've often had with what you said
Scott.
is you make 100 outlandish predictions. 99 of them are wrong.
No, I don't.
One of them sort of
No,
comes
I don't.
right.
And most of my predictions,
right.
I've made
Hey, Peter, I let you finish. Let me
Scott,
finish. Peter, I let you finish. I let you talk.
Scott.
Let me finish. The problem is, Peter, that everybody that listens to you has lost all their money when they followed you with the first 99 predictions that were wrong. And when one sort of comes back around, they're broke. And the problem is that even when you're wrong, because you said that the Fed couldn't raise rates, wouldn't raise rates, and QE4 would be next, you can't, you're not admitting that you're wrong. And the worst decision that anybody can make when they're investing or trading is to not admit when they're wrong. That's how you get carried out.
Have you ever told somebody to buy a stock at 19 and it went to 17? Has that ever happened to you?
Peter, that's not
or
what you
17
did. You
to
told
15.
people to buy it at $1,700 because it was going to $5,000, and it's now at $10.50 down
It's,
20.
You know what?
Now
But
down
it's
$26 on the day.
Scott, it's still going to go there. So you've never bought a stock that went down before it went up. Everything
So
that you buy
wrong,
goes up
Peter.
immediately and never goes down. Excuse
So
me?
Peter, you're never wrong. You weren't wrong when you said that QE4 was going to come before an interest rate increase.
Wait a
Peter,
minute,
this is why I think you're dangerous,
QE1,
because you're
2, and
not
3.
willing
Did
to
you
admit
predict any of those?
when you're wrong. Traders and investors are wrong
QE4
all day,
is coming,
every day.
Scott.
Guys,
There
if
you
I could
go.
just,
See,
if I
that's
could
the
just,
problem.
if I could just jump in for a
You
moment.
didn't predict QE1, 2, or 3 either. Why don't you give me
Peter,
credit for that?
Peter, with a final question to you about gold prices that kind of wraps up this conversation that you're having. You're still taking the view that gold is going higher. As you mentioned, you're relating it to stocks that potentially they go down before they go up. How much lower do you think we could go before we start to rise again?
Well, again, I don't know. I don't think there's that much downside because I think most of this is already built into the price. Everybody has been anticipating the Fed was going to raise rates. In fact, they thought they would have raised them a lot more than 25 basis points by now. There are still people who think there's a lot more rate hikes coming. I still believe that's wrong. People are ignoring the inherent weakness in the U.S. economy and the fact that the Fed is going to be back to its old tricks. It only has one game plan for recession, and that's printing money. And when rates are at 25 basis points, there's not a lot of room to take them lower. You can go negative, but it's QE4 that they're going to be relying on. In fact, Janet Yellen said so herself in a press conference a couple of weeks ago. She was asked, what are you going to do if there was a recession in 2016? And her response was more quantitative easing because it worked so well last time. Well, it didn't work well last time. That's why we're going to be right back in recession in 2016.
Peter, we got to run. Just to recap your points there, you do think that we're going to see a recession that's going to trigger the Fed to take back the action with the rate hike, maybe take us into negative territory, and that QE4 could be on the table. We're going to hold you to these predictions. We always do. We'll have you back on soon.
Absolutely hold me to it.
worried?
No,
Because
because
you're the contrarian?
they're just still little cubs. I mean, they haven't really matured into a full-blown bear yet. They have no idea just how bad it's going to be.
Okay, so how bad is it going to be?
It's going to be awful. But
How much worse? Because since we saw you last, we got a jobs report that some people will say was terrible.
Do you guys remember the financial crisis of 2008? Did you think that was bad?
Yes.
Yeah, this is going to be worse. No, but it's not necessarily going to be concentrated in the stock market. See, I think that the government, the Federal Reserve, their main goal is to make sure that the stock market doesn't collapse again, to make sure that the real estate market doesn't collapse again. And they may succeed, but only by sacrificing the dollar. And so we're going to a currency crisis. And this crisis is going to be much bigger than a financial crisis. The impact it's going to have on the average American, on his standard of living, on his way of life, is going to be much more profound. And sure, people won't lose as much money in their stock portfolio, but if they try to sell their stocks and spend the money, the purchasing power that they lose is going to be much greater than what was lost in 08. And of course, 08 gave way to a huge comeback in 2009. So we got saved. We're not going to have that kind of reprieve again.
People should care about the truth because the truth is the truth about how things are. And it's important for us to recognize how things are, not to pretend that it's something else. If you have the truth, you know what reality is like. If you don't, you're ignorant of reality.
Contempt. How many times have you read a story in the last 3 or 4 years that the big banks don't find many credit-worthy clients to lend money to? We hear it all the time. So what they do is they do the bond carry trade. They borrow at 0 and invest on the 2% and put on futures leverage to multiply it by 20 to 30. That's, if they get 20-fold leverage on a 2% arbitrage, they're making 40%. And that's why you're not seeing the interest rate rise, because the Wall Street banks are borrowing at 0%. If you want to wreck their carry trade for bonds and interest rates, they're not going to do that. And I don't really believe the December action was an interest rate hike. I think it was a little fiddling with the switch gear to make the reverse repos work properly.
Yeah, I also saw an interesting video from my friend Lewis over at Small Gold. He thinks that the Federal Reserve is threatening to still raise interest rates to protect the dollar index, that they can't really raise interest rates anymore, that they've been just trying to meddle with the dollar's exchange rate now instead of an interest rate increase going forward.
Well, absolutely, and they're losing their credibility by doing it, I think, about 30 consecutive times without raising the rates. And you really take a close look at what happened in December, and it's not really a rate hike. So they're not going to do a real rate hike after a fake rate hike. It's getting very interesting and very dicey. They cannot defend the dollar anymore except with jet aircraft, howitzers, and naval destroyer vessels. That's how we're defending the dollar.
Yeah, and last year we did an interview, Jim, you and me, and you.
People should care.
Well, I didn't know about that. Thanks for pointing that out. We've got Putin calls the Western leaders mutants. Why does he do that? Why does he call Western leaders mutants? He's in particular talking about Western Europe, British, and Americans, because they're a bunch of pedophiles, Satanists, and gays. Okay, is the country ready to go from a gay man president with a gay man wife in an arranged marriage by Reverend Wright in Chicago for the cost of $25,000? Are they ready to move from that to a lesbian woman president?
I think so.
Whose husband makes votes all the time not to be with Hillary in bed. Now, I think it's a total joke. I don't waste my time studying it. I do hear things that happen. I mean, you have an upstanding audience. I don't want to get really off color in some stories, but I know a fellow who has significant contact with Secret Service who know a lot about what Bill and Hillary did in the White House. And it's some sickening stuff. These are very sick people. And the central bankers and the Wall Street bankers are of the same type. And I think they're going to get swept out like yesterday's newspaper that used to serve as liners in the bird cages.
People should care about the truth because the truth is the truth about how things are. And it's important for us to recognize.
不批不逼迫，你根本就没有。来，今天为什么最后
没有超越自己，没有配合我们的凝聚力不够，勇气不够，
没有突破自我，团队能力可是放不下，没有狠下心。好，准备好屁股啊！再来一下！把手拿上！
People should care.